Okay, folks, welcome to Friday the 17th, and we have President's Day coming up for a market break on Monday. But to close out the week, let's have a little look at what's been going on. We're going to go straight to the S&P 500 index here and see that, well, we have been moving within this bull flag, as you do, from high to low, and then looking for the breakout on the high. Okay, so we've had an attempt at the breakout here over the last couple of days. But no dice on the hold here, and really, yeah, pretty dour stuff. Following the PPIs yesterday, coming out strong, but not getting beats on priors. Okay, so that's really important to note. So pulling back here, I think we can pick up some buyers and then start with the push. So again, 40.55 is very important area, kind of top of this range, not to be discounted at all. And ultimately, I think any further push down into here is actually just going to bring the sharks out looking for longs. And so, these have been really tough trading conditions the last couple of weeks here. But being long, I think, is the way forward. The market is shrugging off all of the recessionary talk. Bonds, you're getting 5% on a 6-month T-bill at the moment. You're getting about 3.8% on the 10-year. You know what? The real struggle for the market is that. Sorry, hold on a sec.
ECB's Villeroy speaking.
The real struggle here is that we're really kind of, there's two markets going on. There's people looking for the risk-free rate, where they can get, as I said, from 5% in the 6-month to 3.89 on the 10-year, or they can roll the dice, right, and look to buy dodgy tech ETFs and all that sort of stuff. And they're adopting a lot more risk for really a comparable return to what you can get on bonds. So, tech sector is going to really have to be showing some outsized returns over the next 5 years, even 10 years, for the shift to fully, I think, move into equities on the NASDAQ, for example. But I think, look, technically, just looking at these markets, forgetting about all that noise, I think we are supported above here. I think we're supported all the way down to 43s, for a bounce on equities. Don't forget we are above this trend here. So let's kind of go down to looking at what we're having this morning on the 60-minute. You're seeing there was that bounce yesterday on the open after the data on the open bounce, and then just completely wiped out and taken for new lows on the session into the close. And so we just drifted then further down this morning in APAC and this European session, not quite getting to this area and 40.43s down below, and that big trend coming in around 40.30s. But I think you need to be vigilant, and if you want a really nice trade, I think longs from here are good. If this area breaks, I would not be looking to buy anything. So at the moment, if we shift above VWAP again here, pre the market, I think we're good then for continuation through the US session into pretty much new highs on the week. We could have a hell of a close coming into President's Day weekend. That's something to look out for on equities. On oil, listen, it can't lift its head above water here. The SPR release, all these yellow areas, we had a gap down here, we had a gap down here, we had we had a tiny little gap down here, and we've had a gap down overnight as well here. So these are based on pit hours and electronic opening hours. So look, 75.96 for potential for longs here. I don't like any longs here. I think, look, maybe close the gap at 78, 71s and then further downside. But there is no catalyst for further upside here at the moment. Not unless we get Xi Jinping coming out again with more commentary about China wanting to expand their consumption, which was a slight tailwind for the market yesterday, before we came into European Open, and then bang, down we go. So oil, look, I think we just need to wait a week or so to get some really good levels, to be looking for longs. But on oil, that's going to be $70, and I think before we get some decent long opportunities, on the medium term. On the day trade term, I think, look, you got PVAL, you've got 75 line E6s, you got all sorts of stuff there to be looking at. So, yeah, look, one more thing is that we now have the VIX on here, and just showing you the VIX. We refer to some of the videos we have in Duggan Capital about what the VIX is, but essentially this is the sort of the fear index. So if this thing goes up, equities go down. It's based on the put call ratio. And essentially, I think we're seeing some really scary stuff happening on the VIX, especially yesterday. Conditions shift up on the year. And I think we're not only targeting 22.25s on VIX, but, well, really, that's all we're targeting for now. That was traded out there on the 19th of January, sold down. But now I think we're putting in a rounded bottom here. And I think, yeah, we should be looking at 22.250s as a potential upside target to close out the week here on VIX. If it holds over the electronic price, 21.180 is the electronic opening price. All right, so yeah, look, see buyers coming on the DAX on the bottom here. Yeah, we could go on and on here, but another thing to note is that the dollar is definitely on a pullback here, or finished on the pullback, I think. So you see this pullback here on the weekly bars, and then we're starting to bid back up out of here. Of course, that 103s level coming in, which is a 2020 high, coming in actually as support there, really. And I think we're looking at a much stiffer dollar over the medium term. I'm talking about a month, 2 months here. And I think potentially on this pattern, we could actually see new highs this year on the dollar. Well, sorry, that would be like new highs on 20 years, 10 years, 15 years. On the dollar over the rest of this year. So let's see. It'll be interesting to see what happens at 109. So when we get back there, and I think we will. All right. So that's it for me for another PUS session. Have a fantastic weekend. We have Six Nations break this weekend, and then we'll be looking forward to much more the weekend after. But listen, I'll see you all on Tuesday. Have a great session. Very light data site today. Doesn't look like there's much to be doing. Take care. Cheers.
And that's all, folks.